94% of the time. What exactly occurs here in the month of July, and why do we need to be paying attention as traders and investors? In today's video, we look at the wild world of the last 48 hours and how it could have dramatic implications if we break new highs and start another short squeeze. With the S&P 500 hitting a low and then almost reaching for a new high, there's clearly a lot of movement in Wall Street, and we've heard signs that there is now a ceasefire. But will it hold, and where are the next big flows? Well, as we suspected, if 330 on Tesla was going to be broken, it would move towards 350. Could we see another massive gamma squeeze? Guys, join us today as we cover stocks, commodities, and cryptos in their entirety. It's a lot to get into. Let's do it right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the big data, and of course, the key levels that have been hit over the last 24 hours. And that's not to mark exactly what just happened with Tesla, which was a big gamma squeeze. Can it break the next level and continue on up? Well, let's kick things off here with Trump's announcement that Iran and Israel have obviously come to a complete and total ceasefire. Now, I am getting some reports saying that this may not be confirmed by Iran or Israel just yet, and we don't, of course, know how this will play out. But at the time of this recording, we've seen markets move towards their highs and obviously start to move a little bit bullishness. Now, according to the latest Goldman Sachs report, volume and panic has been the story of the last couple of days. In fact, the last week. You can see here the panic index, according to Goldman Sachs, rallied all the way back up to extreme highs. And funnily enough, the markets have not acted the way that many would think. A lot of people are going to be on the short end right now, as we see in options, and therefore going up seems to be counterintuitive. There are some cases for this. We've shared the charts before, and what we've generally found is that most people end up going the opposite way because of the news and the panic and the fear. Remember, fear is 2 times more powerful than greed in terms of our two main raw emotions. And at the same time, markets have often rallied off conflicts, at least initially. Now, biggest inflows into energy. As of the weekend, we had the biggest inflow since October 2023, and we already reported that bullish Brent bets were rising by the most since October of that period of time. Now, why is this important? Well, of course, when everyone's doing it, it's probably not going to work out. And similar to some of the videos we've posted, we've talked about how generally what happens is we get a spike, we get a decline, we go back to around the peaks, and then we end up dropping afterwards. That's the way it's played out the last couple of times that this has occurred. Now, it seems like it has worked out exactly the same way. Crude absolutely got smashed after we saw the announcement of the ceasefire. We're down to about 65, 66 at the time of this recording, and barrels just continuously decline across the board. Now, in some ways, you could also say that if we continue to see crude really weak, it can also show that there is a weakness in the economy behind closed doors. So it's going to be one that we need to watch closely. But just remember, with crude, it's very dangerous with everything that's going on right now, and you have to have your risk management in place. And I guess the last 24 hours really showed that once again. Do remember as well, we hit $80 a barrel on the weekend in terms of futures, which is actually the resistance level that I would have thought that we would have hit on Monday, but it was all kind of dropping already by the time the real market started to open. Let's have a look here at defensive sectors. Now, if you're a macro person, you're looking at the long term, you're going to be looking at this chart and saying, wait a second, does this mean the markets are not very defensive and we could be heading for another dot-com crash? Yeah, this chart does suggest that there is a very, very low level of kind of defensive sectors in the markets. And in general, everyone is on growth, and that can also show euphoria. Some of the things we're watching this year are IPOs and new listings. We're also watching hypergrowth in particular, as they have been sectors that have done incredibly well over the last 1.5 months and continue to do decently in the markets. And that's where seems to be all the retail flow is, and a lot of the speculation is occurring. In terms of defensive sectors over the last day and 5 days, you can see here the last day we did not see defensive markets act, and over the last 5 days we also have seen most of the defensive stocks down below, which basically means that while we're starting to trade in this range, the market is still not really acting in a way that usually would be, normal with a big drop. So remember, if it goes defensive in a sideways market action, or what we call a pullback in time, kind of looks like this, that generally means that if you have defensive sector movement, it's a great clue of what Wall Street is doing. And at the moment, we don't have that. We haven't had that the entire time. Now, the second half of June might be kind of weak, which is what we're kind of seeing right now, up, down, all around. Obviously not that much to the downside, but it turns out that the first half of July is historically strong. And as we've mentioned before, it usually ramps pretty heavily at the end of June into July with big moves and big inflows. And you may not be aware of this, but during the month of July, since 2009, the Qs have actually had 94% win rate. So that basically means the NASDAQ is coming into its best month of the year. 94% of the time it wins. And if price action does go with that data statistic, then of course that is a pretty strong read. And indeed, it's probably better than most people's trading portfolios in terms of understanding the stats and everything going on. Now you may say this time is different, but just remember it's all about flows and price action first. And here on the channel, we like to see what are they doing? We follow the TA, we follow the flows, and then we bring the data in on top of that and say, does the data give us confidence in this move? And if the market movement is up, it's breaking out, it's squeezing, its options calls are getting wiped, all these types of things, then you're going to look at that stat and say, well, it looks pretty good to me. Now, what about net GEX? Now, it does seem like there are still more puts in the market than calls overall. And you'll notice here that 5,900 is the key strike. And we've noticed that because, of course, on the channel, we've talked about 5,900, 5,920 being the buy support. It was again over the last 24 hours. And of course, we've seen 60.50 being the call wall and 6,100 being the massive call level, which is right at those all-time highs. So at the stage, we are looking for a 60.50 break close. If that does happen, we move towards 6,100 and probably an all-time high. And what are we looking for to lead this market? The answer is always you want technology. In the US, it's all about innovation. Semiconductors, technology stocks, if they're leading, then that tends to be the outperformance of the markets. So remember to always have semiconductors on your charts, XLK on your charts, which is technology, and convert them to against the SPY as well to see whether they're outperforming or underperforming. Now, we did mention one thing about ETHU, which is a Ethereum fund, that there were a ton of transactions and they've led into a sell-off and now a bit of a rally. Could this still be a sign of an overall Wyckoff sell? We'll look at it later on today's video, but I just wanted to show you here how many clusters there were through that particular fund. I also thought I'd leave this one in the video as well, which is the ARK-K, number one largest dark pool of all time, number one largest trade of all time, going through just recently, because this really shows that somebody made a big trade. Now, that could be a take profit. Just remember, it doesn't have to react straight away. It could even keep going up. They could be wrong. But certainly somewhere here, coming into last week, this was a Friday trade, someone wanted to get rid of a big position, and of course, somebody did buy it. History suggests that 2025 is going to remain tough. If we have two really good years, that is year one and year two, being over 20%, then usually year three is up, down, and all around. And this suggests that sometime this year, probably Q3, we'll have a major, more of a sell-off kind of event, and then we'll probably chop back up and all of those types of things. So if I had to guess at this stage, I'd say we might see a little sell-off here is possible still, and we rally, make an all-time high, dump down, rally off, do this type of thing. That is the traditional way that a 2025 would play. And we've been kind of following this path all year. We've known that there was going to be somewhere between a 10 and 12% sell at the start of the year. We ended up getting 20 because of the tariffs. And then we've picked back up off this so far. But we're kind of thinking that there's going to be further volatility as all these events unfold and we see, certainly quite a lot of impacts potentially from tariffs and other things. Now, what about the S&P 500 and central banks? Well, central banks have upticked a little bit after declining. That means liquidity has injected, but it's still less than where it was last week, which is not really great. But again, it's not going to have an impact onto the current price action. And we've also seen the tweezer from last week come under some pressure. So what this basically means is that if we do take out these highs and close this weekly, we have to assume that the market is going to make most likely an all-time high, and that this is what we call a pit or a pullback in time, and it's getting ready to squeeze people out. So effectively, this is an incredibly important high. And you'll notice the market closed at around 60.25, but now it's trading at about 60.50 at the time of this recording because of the ceasefire announcement. So we're not confirmed on every side of that yet. So of course, we don't know how exactly it's all going to play out, but we do know that if we start to close above here, that is going to have a lot of shorts on it. and most likely it could create a big squeeze. On the bottom end, we're still looking at 5,800. I think 5,800 is still an excellent level to be watching, and according to the futures market, that's still possible. In our live stream on Monday, we talked about this level here being a zone that we thought would be defended, and it actually was. It came up to it, and day traders would have been pretty happy, at least initially, because it dropped like considerably. I mean, you can see here it went boom straight back down as soon as it hit this zone. It actually dropped about 1% off that level, and that means that you've analyzed a really good zone, because if you get an instant reaction to it and you get a reaction that moves quite a lot, that's always a very good sign. Now, what didn't happen was it didn't continue on. We didn't get below 59.20, 5900, and we've obviously then pushed back up to these highs. And we now find ourselves right at that high. So we find ourselves right at the level where if we get a significant close on the market, that we would probably be going into the squeeze. And I'll explain why that would happen. And you can see here, it's based on the S&P 500. Now, we do have a ton of puts. So what happened on Monday was everyone went for puts. Effectively, everybody was buying 5,900 puts. Look at the outweighing of the puts versus the calls. Now, we do know that around 60-30 is a lot of calls, 60-20, 60-30, which makes sense for the session. But if we go here to the 25th, you'll notice that we get huge amounts of calls on the 60-50 zone. So this is where the call wall is going to be. And we just saw a Tesla call wall obviously push through and move towards 350. Now, 5,900 remains incredibly stacked. So to go negative gear, or negative gear, to go negative on the gamma, then we're going to need to move through 5,900. To go positive and really start pushing up and start squeezing out the shorts, we're going to need to close above 60.50. So we're still stuck in the range, even though it may not feel like it. But of course, the bulls will be feeling more favorable over the last 24 hours as, really 5,900 got struck in the futures and just instantly bought back up. And that's just because everyone's fearful, news media and everything that's going on. And of course, you can see there that huge stack of puts. Everybody bought puts 5,900. And it's why sometimes you've got to be, leaving your opinion at the door and instead looking at the price action. We're in a neutral area with an uptrend coming into it. So technically it's neutral bullish. Obviously, I like the idea of a 5,800 level on the S&P, but it hasn't happened. If it's not going to happen, it doesn't happen. I just like the level because it makes sense. Weekly 20 is also there. Tesla, you can see here, guys, at 350 was struck, went a little bit above that, and then came back down to rest underneath 350. Next level, 380. You can clearly see it here, 350 to 380. So there's calls everywhere. Everyone's buying, robo-taxi, all sorts of things causing a stir. And again, it doesn't matter what your opinion is on what's worth. If options are flying, then the market will rally off those levels. So at this stage, 350 is now the call wall. We move from 330 to 350 very, very quickly. And now if it gets through 350 and closes, we'd be moving towards 380, you'd have to think. NVIDIA, what's going on here? 145. I mean, we always say the same. Yes, it's 147 this week, but 145, 150. Always the level. 150 plus, you'd have to think NVIDIA is going to do pretty well. Let's look at the volatility now. It jumped up and then went straight back down. No real movement here on the vol. I wouldn't really say anything's happening on the VIX too much. I would also say yields didn't move as much as you would expect. So you can see here that we've got really a 4.88. That's almost a nothingness for the 30-year, and the 2-year dropped a little bit. So again, nothing much going on in yields. And in terms of bonds, that is corps and stuff, and risk, it doesn't look like there's too much risk in the bonds market still. So whether we believe it or not, the bonds market is still not cracking and it's still not showing any sign of letting up. And that's from the corp side. Remember, there's a difference between the treasuries and the corps. And I do think the treasuries are going to have an excellent, crazy trade on them over the next 6 to 12 months. And when it happens, it's going to be crazy. And I mean, it's going to be a big one. And it's going to be something to do with the Fed, in my guess. So I think treasuries will come into their own, but not just yet. We're looking for that event. So stay tuned. Make sure to subscribe. That event's going to be wild. Let's have a look at the US dollar. It rejected the perfect area to short. And this was a very nice short if you managed to pick it up. Let's actually have a quick look here together at the small time frame. I'm interested in the 2 hour and 5 minute. Yeah, so this had an excellent 5 minute trade on it. And I can see that by, when you're looking at this price, particularly when it broke through this 98.50. So it was pretty aggressive towards the downside. You can see here the rally. You can see the significant drop, taking out that low, and then it's continued on with the trend. That's why it pays to always go with the prevailing trend, at least initially. And that 99, that's a That's an absolute hit. So very, very nice there. And that would have translated pretty well into the euro as well. So if you're looking at, currencies, they haven't been too bad in terms of decent trades in recent times. A lot of you have been looking at them, and this one actually already had activated before. And this is just a beautiful squeeze against what would have been a lot of shorts, and heaps of people would have gone short here. I think if I checked it rightly, the sentiment on the euro at this time when we were doing a live stream for our private community was, I believe it was 70% of retail traders were short. So you can really see that sometimes approximately, sometimes, retail is really behind this one. This was a bull buy. Maybe we'll get a new high here, and possibly the dollar will drop back into, a 96, 95, 50. If that does happen, then it's probably going to be extremely oversold at that level, and you've got to be a bit careful. Gold barely hangs on to the daily 20, even though the dollar dropped. No break of 34.05, which is the bigger one. And some day traders would have been happy to get it back up to this supply. There were a couple of okay, decent trades in there, but 34.05 is the big level. What about silver? It dropped as well, but then now it's rallied back up, and we're looking for a 36.50. No 36.50, probably no continuation for now, but that's a nice bullish hammer rejection here on the 4-hour chart. Oil just shows you why you got to be really careful. Now, you could almost argue that oil's back in a buy zone, even though it dropped right back down. Around here, I don't know what's going to happen, but it just seems, wild what we've even seen happen over the last week and a half. And for that to be it, who knows, maybe it is, I don't know. But oil, you can see here, has come back into a very interesting zone. You can make cases for everything in here to be bought up, although because it's dropped so significantly, there's no structure. And that is always something I look for. I usually like to have a structural trade, so it's not really there. Tesla, you guys know how it works. 350 plus close, move towards 380 in this case, which actually takes us to kind of like a nowhere land, but that's where the call wall is. So yeah, nice strong close, robo taxis, all sorts of things. Basically it's moving here. So yeah, decent trade, and we watched that one live to at least 330, 340 during the live session that we do free on Monday opens. Nvidia, no movement, no breakout, nothing to suggest that this market is moving on the upside yet in terms of real breakouts here, at least due to that. Google, no 155 yet. I will just load up Semiconductors so you can see the same resistance. Notice we're still there. So the market's kind of hovering at a breakout, but we're not seeing the leader come with it. And I like to see the leader as well as of course the stock market index coming through. So that hasn't happened just yet. US 2K, nice bounce off this level, still with the inverse head and shoulders. If you're still long, I guess that's good. And you're looking for 22.90. So ideally we can get back to that level at some point in the future. And NASDAQ here going for that new high, breaking through, taking the low. Pretty much a classic pullback in time that does end up squeezing higher. Just needs that little bit extra. I could see a lot of people have activated probably buys in this. And if the markets do break to the upside, then it could be quite squeezy. But it's up to you. I mean, there are always other trades. So remember, come from the abundance mindset. If you miss something, don't worry about too much. Now, Ethereum is an interesting one. When we move over to crypto, you'll notice here that we've rallied up, but we're going to have problems around 2,500. You've got problems here as well. And I could see bears being at both these zones. We discussed this in the Monday live session. Kind of what I expect, either bearish here or bearish here, at least some tinge. And then if we end up making a higher low and going higher, cool, that could be the end of it. But do remember that is a Wyckoff pattern with a decent amount of trade. So for now, I'm actually still looking at around 1900 as a possibility for crypto. I don't think this is recovered as a chart. Now, Bitcoin's a little bit interesting as well because it dropped, took out another low, and now it's rallying. So this is one of those ones where if we now take these highs out, maybe a 108 plus, then you've got to think all-time highs. This is certainly a white point. So at the moment, it is back to the most traded zone. It is back to resistance and it is back to a level where I would think that you would see shorters recommence into it. Guys, we have seen a hell of a lot over the last couple of weeks and it just doesn't seem to be stopping anytime soon. On Tuesday, we do have the Fed Chair Powell testimony at 10 a.m. Same thing here on Wednesday. So I don't know if there'll be a little bit nothing burgers, but certainly they could move some things. And then we've got core PCE on 8:30 a.m. New York time. I think to summarize everything that's going on right now, you've really got to check, I guess, your fear and greed out. If you have extreme fear or extreme greed, then you're probably biased in some ways. Look at the flows a bit more. We still are technically in a neutral area, but you can't deny that the markets have gone a little bit more bullish in nature over the last 24 hours in terms of taking that minuscule low underneath 59.20 in the futures and then pushing higher. And of course, if we do take out the tweezer on the S&P, that's notoriously bullish. So, keep an open mind to both sides. There are easier trades probably than some of the markets at this stage in terms of the S&P. The easier trades have been in some of the commodity spaces and currencies, and probably the dollar was the best one in the end of the last 24 hours. Thanks so much for watching. If you enjoyed today's video, remember to subscribe, and we really do appreciate it. See you in the next one. Bye for now.